Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 11th of January. So as we start off this second week of the trading year, again we've got quite a bit of political noise from the US, which is likely to have an impact and determine the main topics for the markets this week. We've got the second impeachment of Mr. Trump, which is certainly picking up pace at the moment in the US, and also renewed tensions between the US and China, this time on Hong Kong and Taiwan. So these are starting to have a bit of an impact on the strength of the US dollar, and the US dollar picking up some strength on the back of its sort of safe haven status at the moment, and that's pushed the US dollar up past some key resistance areas and above a key $90 level. So with that in tow, we'll take a look at a few markets and a few opportunities involving the US dollar. But before we do that, just want to remind you of the live streaming session that we run on Wednesdays. This Wednesday at 9 o'clock UK time, we've got a live session on YouTube. You can find out details of how to join that in the link below the video. So let's take a look at the markets at the moment, and again, couple of opportunities here involving the US dollar. So if the US dollar continues to weaken and we see a weakness coming back in, and that longer term trend of US dollar weakness developing, then one of our markets of choice here is the Kiwi dollar. And the reason is whilst the US dollar has been weakening, the Kiwi has been one of the markets that's benefited from this, and you can see this from the daily time frame chart here. So we can see that the impact of the recent strength in the US dollar has just pulled back the Kiwi back into towards some key structure levels here on the daily time frame. So again, if we start to see some strength coming back into the US dollar, we're likely to find some key strength coming back into the Kiwi as well, and you'll see that back into this sort of area here, back into a area of previous resistance and support, back into the moving average zone is an area where this market has often found support, and the prevailing trend has continued again. So this could be a nice area to start to look for longs if we see US dollar weakness continuing. Now on the flip side, if we have a look at another market here which could be of interest with the US dollar continuing to strengthen, then I think the euro is going to strengthen at the cost of the euro. So if we take a look at the euro here on the weekly chart, we can see that the euro dollar has certainly been struggling to hold up these highs and actually make it up to 124 on this leg of this run on the trend, and you can see that the rejection candles forming here. From a technical perspective, some sort of retracement back into 120 looks very reasonable. Just bringing it back into the fair value zone within the context of these markets, and that's just bringing it back into areas where we might start to see some continued strength in. Now that move is some 1,500 points. It's quite a long way and plenty of distance there for opportunities on the lower time frames. So again, if we start to come down the time frames and take a look at this on the daily time frame, for example, we can see that the price action starting to roll over here. We've got a level in here around 121.50 where you can see that we've had previous resistance, previous support, and the market's sort of starting to come back and starting to test that support area. So if we get breaches of this support area, then the next key structure point that we have on this market is down to 120. So we've got that rather decent sized trading window to the short side. Now already, as we're seeing weakness coming into the market here, this is already preceded by weakness in momentum, as read by our momentum indicators. So again, underneath this level, we may well see continued weakness in that, and maybe see a retest there of that 120 on euro dollar. So two markets there to keep an eye on, depending on whether we see prevailing strength or weakness in the early part of the week on the US dollar. Now, if we come over to the oil market, which is a pick of our commodities at the moment, if we have a look at oil on the higher time frames and take a look at this on the weekly chart first of all. So we had this trading window late last year, which the market completed nicely. Our target level on that was that $50 level. Now the market has broken through $50 level and we're starting to see a retracement here. You can see that between 50, the next sort of structure point on this market is up here to around that $60 level. So there's a huge potential trading window to the long side. And judging by what's going on in the world, I wouldn't necessarily sort of hold out for a whole target up to 60, but this is such a huge trading window, there is plenty of opportunities within that. So if we come down the time frame slightly and take a look at this on the daily time frame, you can see that the strong move that we've had here in oil over the past few weeks, and you can see that now the market's broken through 50. It's really overstretched and overextended here. So some sort of retracement back into the $50 level brings it back into previous support. This is quite a significant level for this market, and also back in close to the moving average zone as well. And you can see the structure here from the geometry zone on the daily time frame looking sort of quite reasonable around these areas. So by the time oil gets back into 50, it's going to be back into this moving average zone as well. So if we get back into there, then we're certainly going to be looking at for areas of strength and looking at potential positioning. Now, just taking that one step further, if we have a look at the oil market here on the 4-hour time frame, we might not even, the question here is we might not even see any weakness that drives oil back to the $50 level. And I think the area that we might start, or the question point, is a fast approaching price at the moment. So you can see that we've had this weakness in the the oil market back into around this sort of 51.50 area at the moment. This is on the 4-hour time zone. So again, we've got the point here where we're starting to make a decision as to whether the 4-hour chart is going to find support, and we're going to see a continuation on the 4-hour. If this area here gets taken out, then I think we'll start to see that retracement back to that $50 price point. So again, we've got significant decision points here, deciding as to whether we're going to hold here and continue higher, or whether we're going to see that retracement back. From a longer term perspective, I think we need to see the market retest that 50 price point at some point in time. So if we take a quick look at the Dow as well now, just to wrap up, again from a higher time frame perspective, these markets have been doing extremely well. They've made some extremely new highs over the past week, and they're certainly into the first trading sessions of this year. So at this moment in time, price action is sort of rolling off the 31,000 area. Judging by what's sort of going on in the markets from a political standpoint, and the amount of sort of negative news flowing at the moment, I wouldn't be at all surprised that the sort of negative news might give markets a bit of an impetus here to have a bit of a retracement. From a technical perspective, they look due a bit of a retracement, possibly only into back into the context of a trend here, but that brings it into around that sort of 30,500 sort of zone. Some sort of retracement back in here could be areas where we might start to find support for a continuation to the long side. Looking at this market on the daily time frame, it certainly seems that those zones here and the structure is proving support, and it has done for quite some considerable time as well. So there's a few markets there to keep an eye on, that we're keeping an eye on in the trading room. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.